7. Presentation of published financial statements. Which of the following would not necessarily lead? So, current liability, not necessarily lead to current liability. Which one of this? Not necessarily need to. So, if the liability is expected to be settled in the course of the entity's normal operating cycle, in that case, it will be operating current liability because it is expected to be settled in the course of the normal operating cycle. The liability has arisen during the current accounting period. Not really, even if the liability occurred in the last periods, okay, but we need to pay in the next 12 months after the end of the reporting period, it will be this thing. So this is not, you know, one of the cases where this will not necessarily lead to a current liability, okay. So this should be the answer. Still, we will look at the third and fourth option. The liability is held primarily for the purpose of trading. Yeah, I mean mostly the current liabilities relate to the liabilities that are held primarily for the purpose of trading, like current payable and all of that, like creditors, accounts payable, notes payable, all of that. The liability is due to be settled within 12 months after the, yeah, this is the one of the primary conditions, it will definitely lead to a current liability. Okay, so our answer will be the second one. The liability has arisen during the current accounting period is not mandatorily or necessarily, it will not lead to a liability be classified as current liability. 278. Which of the following would be shown in the other comprehensive income? Okay, let's see what are the options. Increase in valuation of property. So that will go to your P&L. Okay. A statement of profit and loss. Profit on sale of investment. So you have a profit on sale of investment. So this profit will also go to P&L. Okay. Then there is some government grant. So its treatment depends on the nature of this, but ultimately it goes to the P&L. And then there is this revaluation surplus of a factory building. Yeah, we keep it in the OCI first. So it will be, it is this recognized in OCI. So our answer will be this one. 279. Using the pull down list provided, which of the following are not items required by IAS1? Presentation of financial statements to be shown on the face of the financial position. Face on the statement of financial position. So on this, inventories are definitely inventories, yes. We have provisions, yes. This also goes there in the statement of financial positions. And grants, no, depends, the grants, no, it goes to the P&L because the grants will be the answer. It depends on the nature of the grant, how to treat, but it ultimately goes to the P&L. And then there is this intangible assets, or assets are recorded in the financial, so this will also, yes, okay. So our answer will be grants. How AIS1 presentation of financial statements define the operating cycle? What is an operating cycle? So the time between acquisition of assets, first one is says acquisition of assets to processing and delivery of finished goods. Is that the thing? No, this is not our operating cycle because you acquire assets in a different this thing, and then you finish the goods in a different. What is the second one? The time between delivery of finished goods and to the receipt of cash from customers. No, this is also not your operating cycle. Third one, the time between acquisition of assets, of processing and payment of cash. No, this is also not your operating cycle. I mean, this is the definition that is provided in the IAS1 presentation of financial statements. It defines the operating cycle as time between acquisition of assets, okay, and receipt of cash from customers. Yes. So that is the operating cycle as defined in IAS1. So fourth one should be the answer. All right, the last one, 281. Where are equity dividends paid? E- uh, Equity dividends paid. Where do we? as a deduction from retained earning. Deduction from RE in the statement of changes of equity. Yes, this looks right to me. This is the correct one. Let's see if there's anything else. As a liability, why will you show dividend that you have paid as a liability? No. Expense? No. Dividends paid are not your expenses. Is it a loss in OCI? No, these are not your losses. Your retained earning is reduced by the amount you are paying the dividend. So your answer will be the first one, deduction from retained earning.